Good afternoon, Singapore. The future of digital assets depends on the creation of interoperable infrastructure that connects various platforms and ecosystems. I'm delighted today to bring the experts to you, and we'll be discussing the various attributes, benefits, challenges of building that interoperable ecosystem. So, Rayhan, could you introduce yourself and your organization?
Hi, good afternoon, everyone. I'm the CEO of MarketNode. It is a digital market infrastructure operator that believes that over time, products such as credit, funds, and structured products will live and breathe on-chain. And we believe what the market needs is an end-to-end infrastructure that enables that across multiple networks.
Kate?
Yep, I'm Kate Karamson. I'm Chief Commercial Officer at R3. For those of you who haven't heard about R3, we're a world-leading provider of DLT-based solutions. So we really work with financial markets primarily, looking at be it tokenization, but we also work with jurisdictions and countries looking at digital currencies and CBDCs.
Yorgos.
I'm Yorgos. Nice to meet everyone. I'm co-founder of Axelar. We're building infrastructure to connect all blockchains. As you all know, there's a lot of blockchains today, and the technology is very hard to use without interoperability technology. So our mission is to make the technology very easy to use, allow users to use any chain, move their assets freely, and access any application anywhere.
Thank you. Daniela.
And I'm Daniela Barbosa. I'm the General Manager at the Linux Foundation for Blockchain and Identity. And I also serve as the Executive Director of the Linux Foundation Decentralized Trust. And this is the umbrella where many blockchain and digital identity projects are hosted under our open source foundation.
Okay, thank you all. So let's set the scene a little bit for our audience. I think everyone wants to know, why does interoperability matter? And then what are the standards that we need to be thinking about in order to bring about that interoperability? So Yorgos, could you help us set that scene a little bit?
Absolutely. So interoperability is only important if you have a lot of chains, right? If there's one big chain where everything settles, you have native interoperability, composability in that chain, right? So first, we need to establish that there's going to be multiple chains, right? In my opinion, there's going to be at least 1,000 chains that have substantial economic activity on top of them. The reason is that we already see this playing out in the permissionless space, right? And the reasons are technical. If you look at any single blockchain, on the permissionless side, it cannot scale to support more than one big application. And over the last year, we see the biggest applications in the decentralized space launching their own layer ones and layer twos. And there's many, many reasons for that, both technical, but also because they want to be able to capture more value from their users. And in such a world, as a user today, you have to hold different wallets on different chains. You have to bridge your assets around. Typically, you have to use a centralized exchange to get good rates. And this is going to be impossible user experience for the average retail user. It's already very hard for crypto-native power users. So how do we make this technology usable? And the asset is interoperability, right? In a world where we have many, many different blockchains that are fragmented, how can we allow users to only have to think about one interface, right? So our vision is in a few years, people will have one interface on their phone or their laptop. They'll only have to think about assets and applications. Maybe the asset is on Solana and the application is on a private chain. Users should not have to think about that. So abstracting away the chain and making the technology usable is why interoperability is important.
Understood. So that usability leads to adoption, and that's why we're talking about interoperability here. So Daniela, the Linux Foundation hosts several blockchain projects. Can you share with us, based on your experience, what are the technical standards that need to be established to achieve that true interoperability across those different blockchain networks?
Sure, and we see it in a couple of different levels. So number one, we agree, right? There's not going to be one blockchain to rule them all. Maybe 12 years ago people thought so, but not anymore for sure. And it's really important to acknowledge that it needs a space for different blockchains and innovate, new layer twos and new layer ones that are bringing innovation into the markets as well. So for us, as an open source foundation where developers come to collaborate on projects, even under our Linux Foundation umbrella, we have projects like Bezu, for example, or Hyperledger Fabric that are competitive, right? But what are the pieces that they can also interoperate with and work with collaboratively? So when we look at how the developers and the engineers are collaborating on interoperability, we see a couple of things. One is driving the technology, how the technology is going to be used, but things like standards on cross-chain messaging, atomic swaps and bridging standards, common token standards, obviously ERC standards, but there's a need for more universal standards, token standards as well, and a lot of that work is being done across different industries. The other thing that I think is really important, and sometimes people forget, is standard definitions for what what the different asset classes are, right? So a lot of people actually, RWAs, we joke all the time, like RWAs actually mean something completely different in the trade finance world, but having standards is not just technical standards, but also things like definitions as well. And I'm sure the panelists have others that they're working on.
Fantastic, thank you. So you're talking about this this quite unique circumstance of sometimes competitive projects still collaborating despite that competition, and you opened up to us having an opportunity to focus on asset class. So Rayhan, as a digital market infrastructure platform, what asset classes do you think matter for digitization, and perhaps you can share your expertise on what those interoperability challenges are for TradFi as they embrace these digital assets.
Indeed. So I think back in 2022, the BIS, Bank for International Settlements, published a paper in which they talked about the spectrum of tokenization. It's a very interesting concept. The answer to your question, Fiona, that they came up with was, it depends, right? When you look at the tokenization spectrum, either you go after very large markets that have frequent issuance and frequent churn, you find efficiencies at the margin and go for scale. The other end is you go after highly illiquid assets where they don't issue or be traded very often. You find larger efficiencies, but actually the supply is quite lumpy, right? And I think anyone who's embarking on that journey has to think to themselves early on, do they play the left-hand side of the spectrum or the right-hand side, right? And the right answer is really, what is your operational DNA? Where do you come from? So MarketNode was founded by Singapore Exchange and Temasek as the initial founders. Over time, we've announced investments from HSBC and Euroclear into us. And actually, what we are more comfortable with is the high-frequency issue and velocity assets. We like finding efficiencies at the margin and then trying to build market-wide infrastructure. So very early on, we looked at every asset class under the sun, right? Back when we began this, everyone was talking about T+0 settlement. Now no one really cares because certain markets like India, for example, are doing T+0 settlement without a mention of the word blockchain, right? So settlement compression is not exciting enough. Having said that, what we find interesting is there's many asset classes out there that are at T+15, right? So unfortunately, funds, even in markets like Singapore, can go up to T+10. So when we look at markets that are beyond T+5, a lot of paperwork involved in processing, a lot of need for digitization and processing. And when we think about where, even though fractionalization is not our main intent, but where fractionalization would be able to expand distribution, and I'll give you one example. We worked on structured products in 2023, and we're not in a world where we want to make $1 a structured product. We're looking at general structured note issuance sizes as 2 million. How do you bring it down to 500K, right? Generally, you look for a confluence of these factors. We landed with credit, funds, and structured products as the asset classes to focus on. We have a close eye on what is coming up in terms of carbon credits, et cetera, but we think these are the three right asset classes for tokenization.
Got you.
Now, interoperability, just a very quick note on that. So, Yorgos was talking about cross-chain interoperability. I think we've spent a lot of time. We've just come out of a project right now where we've built market-wide infrastructure for funds in Singapore. Interoperability for us means how do we connect into a legacy transfer agency, and banking infrastructure, right? Which is a very, very different kettle of fish. And we love talking about standards, but actually the reality is the ones that determine the standards are those that have the most flow today, right? So in a way, what I'm starting to see is a lot of the design choices or standards that were used in traditional banking infra are going to translate into this new infra we're building out, right? It's no bad thing, it's just we have to be realistic that we can't reinvent market infra in a pop.
Absolutely. Well, thank you for taking us through that journey of starting with every asset class under the sun and bringing out your personal experience there. We'll stay on this topic a little bit longer on those use cases for digitization coming to you, Kate. Can you share, based on your experience at R3 with the extensive work that you've done on enterprise blockchain solutions, what are some of the key use cases that you've seen for interoperability, and what are your clients solving for?
Yeah, of course. So, at R3, we're in a very privileged position where we sit within the market. And as I said earlier, we work with primarily financial institutions and within financial markets and capital markets. So, from an R3 perspective, we're really focused on actually what is the problem that we can solve, be it a problem which can't be solved with traditional finance, or how can we solve a problem better with this new technology? And for full transparency, I really am from the world of, I guess, TradFi, and I'm one of those people who RWA meant something very different to me, and before I joined R3. So we also really want to make sure that these solutions are production grade. We're very privileged. There are more solutions in production built on Corda than any other kind of permission network, and many of those solutions in production are also regulated. So also to Rayhan's point, interoperability to us is about we're not about innovation theater. We're not about doing a project, just for a press release. We're thinking about how do we make this real? How do you go on that journey with our partners and with our ecosystem? So interoperability is not just about thinking about, be it cross-chain interoperability, which again is very, very important. And we are also of the view of that there will be many chains. And the technology choice, though, should be driven by what is the problem you're trying to solve and how do you want to solve it? So it's also about integrating into legacy systems, which are super important, especially when you think about, be it regulatory reporting, KYC, AML. And I get it, guys, this isn't the exciting stuff of where we sit, but it's the stuff which has to happen if you want to get things widely adopted, if you want to have easy onboarding, if you want to be able to work with the regulators. So for us, that's super important. And so kind of coming back to your question about be it use case and themes, collateral mobility is a really, really big theme in the market. One of the amazing powers of this technology is you can think about collateral mobility and movement in a whole another level, which is really exciting and also really drives efficiencies across financial and capital markets and has a really clear business value, has a really clear ROI. And again, we need that's the name of the game, right? Really, how can we drive more value? So that is a really, really big theme. And again, if you think about how interoperability can assist with that, that might be between different networks who might be using different technology. And I think a great example of that, actually, we've recently announced a partnership with Onera. I'm not sure if they're in the audience. And one of the reasons we're partnering with Onera is they're also really about bringing different liquidity together. And also, I think one of your points earlier, Fiona, too, is this is a growing and evolving market. Adoption has been slower than I think anyone expected in terms of take-up. And I do think sometimes the industry kind of gets in its own way a little bit. So again, we're really about collaboration. What we don't want is fragmented liquidity across different networks. That doesn't help anyone. That doesn't help the adoption of this technology. So I also really believe we need to work together a lot more to really help kind of drive adoption. So these use cases, many of them are dependent on network effects as well. So what we don't want is having these kind of islands of be it collateral and liquidity. So that's a really big theme, collateral mobility. Also, I would say just generally the big topic of digital money, be it you're talking about tokenized deposits, obviously central bank digital currencies as well. We do a lot of work with countries thinking about how they can evolve, how their economies can really benefit from this new technology to think about be it payments different and ultimately how we can spend our cash.
Amazing, thank you. Thanks. So we've just heard, two of your favorite use cases, collateral mobility, digital money. We heard from Rayhan about that those big TradFi players are often in the driving seat when it comes to designing those standards that Daniela, you kicked us off with. So I'll come back to you, Daniela. Can you share your thoughts on how those traditional financial institutions can find common ground with decentralized networks when they're developing this shared infrastructure, and what standards we should be thinking about when, again, bridging TradFi and DeFi, who are often coming from very different starting points?
Right. And for us, we see ourselves at the plumbing level, right? So different protocols and different interoperability projects. But I think it's really important when you think about open source and open governance of these code projects. One of my favorite stories that I'll tell people all the time is, very often we have some of the biggest competitors in the banking industry sitting at a table across each other, looking to see what are the common pieces that they have to agree to then be able to build at the application layer and at the network layer. So I think it's really important to understand that if you do not have the governance and the interoperability at that level, then it makes it much, much harder, because then you're never going to be able to interoperate between systems, right? And you're never going to have that ease of use. The other thing that I think is really important that we see is when developers show up to work on these projects, very often they come with very unique use cases from the companies or the projects that they're working on. And understanding and having, I think to your point, like having these use cases be very in the forefront of what they're looking for helps quite a bit. So if you think about like what are the core things of getting standards and specifications together, it's industries coming together and not competing at that level, right? Not competing at the level. And if you look at the Linux Foundation, Decentralized Trust Foundation, all of the major players are in the same room talking about like how can they meet the minimum requirements to interoperate so that they can spend the time actually bringing the value to the projects that they're bringing. The other thing that I'm seeing, and certainly here all week, we've been talking about things like unified ledgers and global layer 1s. There's the Canton network. There's a lot of these projects that are networks of networks, and how do you make sure from an interoperability perspective, but also from a governance perspective, that you are able to have these networks interoperate between systems as well.
And again, Daniel, you paint a very vivid picture of that collaboration regardless of starting point. So super interesting to hear you describe that. Maybe we'll go a little bit more DeFi for a moment. Yorgos, could you share what role you think or you see cross-chain protocols playing in permissioned and permissionless networks, and how you think this will contribute to the future of institutional adoption of digital assets?
Absolutely. And just to briefly add to Daniela's point, there is so much competition also in the blockchain space, and there's not that many credibly neutral organizations that can bring competitors together. So I hope you can do something similar for the blockchain space as well, and we're already seeing signs of that. So excited to be collaborating with the Linux Foundation. But when we're talking about public and private networks, we see two very different worlds, right? And two very different users that each represents, right? So first, I want to argue that both are relevant and are going to be important for years to come, right? On the one hand, we see the public permissionless space, which represents the new generation who are anti-establishment. Often, they don't trust institutions. They want to have agency and custody of their own funds. Even for me personally, I'm from Greece. I grew up there, and as recent as 10 years ago, there was an economic crisis, and you could not withdraw funds from your own bank account, right? So I feel like the new generation lives on the internet. It's so much easier for them to do things digitally that at least a chunk of their financial operations will have to move on-chain. And of course, on the other hand, you have the vast majority of the world and the institutions where the banks are the gateway for people to access their assets. Of course, they're trusted guardians of assets as well, right? So for the vast majority of people, we'd much rather have an institution custody their assets rather than do it themselves on a blockchain and hold their private keys on a ledger, right? So where I see the private side going is one where you have these permission ledgers, but people still go to their bank, their custodian, to interact with the blockchain. But then you have those two independent worlds, and the question is, how do you bridge the two? Right? You need to create a secure and regulatory compliant channel between the two so that a user who holds funds on a public chain can interact and send funds to a user on a private permission blockchain. Right? And that's the role interoperability is playing. And this is something we absolutely have to solve. Otherwise, we end up with two different worlds, each innovating in their own islands, but being unable to talk to each other.
Crystal clear. And it's always wonderful to hear personal experience and why that digitization matters with your story of being from Greece. So, Rayhan, I'll come to you. Yorgos was just talking about bridging on-chain experiences with trusted institutions that are centralized and private, or you're trusting a bank to handle your funds. Can you talk to us a little bit about the role of centralized market infrastructure providers and how you see their role evolving as the digital asset ecosystem evolves and becomes more interconnected?
Sure. So maybe just to give the audience an analogy on central market infrastructure. I think when we all started this journey of, let's say, usage of the DLT tech stack, there was an expectation that there would be the likes of Tesla, basically new category creators coming into this, right? And there were a number of successful and very less than successful players come out of this, which I won't name. But actually what you find is that as time has gone on, the OGs of vehicle manufacturing, right? So the large incumbent financial market infrastructures have got their heads around the technology as well, right? Every CSD, ICSD of note that I know is now actively involved in this space, right? And whereas a few years ago the theme was very much, they were worried about disintermediation, actually the question now is that how do they re-intermediate themselves, providing the same role but maybe alternative financial market infrastructure, right? So I'll give you a very good example of the kind of thing that we are dealing with, right? So we consider ourselves a digital market infrastructure operator. And for us, one of the roles we've been looking at is that we're less philosophical about public versus private. But when you go into public chains, you have to think about things like gas fees. You have to think about things like travel rules. You have to think about things like sanction screening. Is this realistically something that a financial institution, as Yorgos said, which in my view will continue to be the guardian for the majority of assets, can they do this at scale? Probably not. Would they look to a centralized market infrastructure to do it at scale and be responsible for that reporting? Potentially, right? So that's just an example of the journey that we've been through, in which some of the new roles and responsibilities are coming up, right? And as one of our clients used to say, that you will still need someone to call when things go wrong. So what I mean by that is, if you look at insurance for assets on chain, I think there's a good case to be made that certain assets can be distributed on public blockchains. We haven't figured out the operational model yet. But when you go down that route, you have to think about what happens if things go wrong. Who is actually centralizing the insurance for something like that, right? So again, I think the roles and the responsibilities will continue to change. Personally, I believe for the RWA that I grew up with, right, it'll be very difficult to see things like loans, funds, structured products to be completely automated away. The role will be automated away.
Thank you for that. Kate, do you want to comment on your experience with Corda and your views on, or your lessons actually learned on bridging interoperability between those private and those public blockchains?
Yeah, of course. So R3, I'd like to think it's one of almost it's one of the leading providers, but also we've been around a really long time. So we've seen a lot in the industry, and obviously hindsight's always 2020. But also we need to remember in this space, it is evolving rapidly, and we must be, secure enough to be emotionally neutral and reflect on what's working and what's not working. And I think that's really, really important. We don't have all the answers yet as an industry. Let's just be real about that. And I think, Daniela, you mentioned it earlier, when this industry started off, there was more philosophy of, will there just be one chain to rule them all, right? And even at R3, that was a view that we felt that, Corda could be the chain for all kind of financial institutions who are looking to benefit from technology, but who have to think about regulation and how do you adhere to all the different laws and regulations that you have to. But we don't believe that anymore, just to be clear. And again, it comes back to what problem are you trying to solve, and what's the best technology to solve that problem. I really just need to keep coming back to that point, because it's absolutely key. So in terms of, again, interoperability and standards and use cases and reflections, we again have done a lot of work already. I do want to put it out that I think unfairly sometimes Corda is seen as this kind of closed off, people say private permission. Like we're very much open. We're open and permissioned. There's also Corda open source as well. And again, I feel like we just have to keep kind of making sure the industry understands that sometimes. But again, we've been involved in things like Project Harmonia. Again, thinking about how can we bring different assets and cash from different networks together for DVP transactions, and we continue to really, really focus on it moving forward as well. So, but again, it comes back to some really cool things. Are we all talking about the same thing when we even say interoperability? There's more than one way to solve the interoperability problem. Some people get very almost religious about how it should be solved. I think that can be dangerous, just to be clear. Again, there's different ways to solve interoperability problems depending on what you're looking to do. But ultimately, they do need standards, even when we're thinking about how do you define anything in life. If you look in the financial markets, you think about what Fix did for API standards, for example, very, very powerful. And this is a level, again, to Daniela's point, we need to come together with an industry and all really agree about, when we be it transfer an asset or transfer cash, how does that actually work? Is it actually leaving the network? But also, to your point, Rayhan, who's overseeing it? Because if you're not careful with interoperability, you're also then going to have a third party who ultimately you have a dependency there about how things can also transact as well. So these are big questions, again, which I'm really excited to see. I think the time is now for the market to come together and talk about these things in a really constructive way and understand that, yes, there needs to be healthy competition within the market to help progress innovation, but that also has to be healthy collaboration as well. Otherwise, we all will fail, and ultimately we won't see the world-scale adoption of this technology, which we should see, and we really deserve to see as an industry as well.
Okay. We've been getting into the meat of interoperability, the standards that we want to see, the collaboration that is going to be required to meet interoperability. How about we take the last section of our panel and we look forward and make some predictions here. So in the next 5 years, is there one milestone that sticks out in your mind as indicating success in achieving interoperable digital asset infrastructure? And Daniela, let's start with you and come back this way.
Sure. One thing that we didn't talk on our panel yet is about identity. And I think that identity, and this is obviously a person's identity, but also an entity's identity, is something that needs to be resolved. And there's a lot of great work happening in the decentralized identity with verifiable credentials and DIDs. So these are all techniques and standards that are being used. But I think if we nail down identity in this cross-chain world, and I think we will in 5 years from now for sure, where the issue of interoperability of an individual or entity going across chains, but knowing, especially in regulatory chains, right, making sure that from a regulatory perspective you can be identified, I think that's going to allow the market to move forward much faster.
For me, the milestone will be, what can we do with the technology? Is there one use case that if we can offer this to every person in the world, we can say we succeeded with the technology, right? And that's really the beauty of open systems like a blockchain, that anyone can access them from anywhere, but still people go through centralized front ends, through banks, to access everything today, all their finances. So a simple use case, right? It's simple but powerful. Is what if I can send money, to my mom who is never gonna, build a blockchain, launch a blockchain wallet, right? Self-custody funds. What if I can take an asset, send it from my blockchain wallet, and it lands in my mom's bank account within a few minutes, right? So to me, if we can accomplish that, just seamless transfer of funds across institutions, across blockchains, what Rehan was talking about earlier, how can we seamlessly interoperate across all the existing infrastructure? That's a success, right? That was the initial vision of blockchain, and we need to take it step by step. This is a big step, and from there we can build more, allow people to tokenize even their homes, right, and get loans on a public permissionless chain. But to me, the first step is how do we allow seamless transfer of value to anyone in the world.
Mm-hmm. I guess from my perspective, 5 years, I feel like I need to be careful. I feel like hopefully we're not talking about it, that we're taking it for granted. I think that's when we know as an industry we're really winning, when we take it for granted that, of course, if you want to have cash on one network and assets on another network, they can interoperate. That is when we know we've got there, and I really, really hope and genuinely believe that in 5 years' time we will take that for granted to a certain degree. And then more importantly, that we do have an industry-wide standard, be it rule book, dictionary, whatever you want to call it, where we're all really clear about how you do that. And that also will enable then the likes of the regulators to catch up too, right? If we can really lead the way and be really clear about how things work, then that really helps build regulation around it, which then in turn helps adoption and ultimately means the technology, will be more widely adopted.
Great. Rehan.
I think I had Kate's answer, but maybe I'll wrap it up. I think to tokenize or not to tokenize, as Hamlet said, should not be the question, right? It should just be a menu or a rate card that we don't think twice about, right? That would be the end goal for me.
Great. So we've heard about solving digital identity, having that killer use case of seamless transfer of funds, and just moving past discussion, I think, which I'm sure much of the audience can appreciate. So we have a few minutes left, and we have had a few questions come in from the audience. So we will move to one of those. And very topical, this one is about the costs of interoperability. So we've been talking about how interoperability is important, about setting the standards, about what we can achieve with interoperability. Is there any of the panelists who'd like to tackle that question of what is interoperability going to cost? And Yorgos, we've got a volunteer here.
And I assume we're talking about financial costs here. And it's very cheap. Honestly, when you go from one chain to another, you can batch transactions, like from a technological standpoint, you can batch many transactions, and you can submit them collectively on the destination chain. So the vast majority of the cost is the gas you pay on the origin chain and the gas you will pay on the destination chain, which, if it's a private chain, maybe there's no gas at all, right? So from a technological perspective, we have a way to make the whole process very, very cheap and effectively like amortize the cost and bring it down to zero. So there's not going to be any additional costs when you're going, when you compare transferring assets or doing an operation within the constraints of a single chain versus cross-chain, there's not going to be an additional cost, right? It's going to be as pricey to do it on one chain versus like doing something cross-chain.
Maybe I can take a crack as well. So to me, again, this comes into the new role for centralized market infrastructure, the next generation of FMI. And I think we have to be clear on what is the cost for, right? I don't think many issuers or asset owners, at least in this part of the world, care about, let's say if the costs happen to be very high, Yorgos, they would care about reducing settlement time from T+3 to T+2. No one cares. But if the customer proposition to them is broader use cases with distribution, collateral, access to institutional wallets, then you find the dynamic changes, right? Then as a matter of fact, the issuer may be willing to bear that because the additional distribution versus people going out there and selling their products is a lot stronger. So efficiency versus distribution are two levers for me, and that's the way we look at who bears the cost.
Great. Well, My thanks to the audience for sharing their thoughts and asking the panelists some questions. And my utmost thanks to the panelists for sharing their expertise and having a wonderful discussion here today. Thank you all.